Nat gas market experienced a slight decline during the early trading session on Monday, prompting concerns among traders and investors. The market presented a blend of viewpoints as some traders remained skeptical about the projected changes in demand, whereas others expressed strong confidence in the potential of increased demand to stabilize prices. Asian spot LNG prices edged up last week, buoyed by stronger demand due to above-average temperatures in East Asia, but gains were capped as inventories remained high. The European gas prices surged higher to around €29 per megawatt-hour as record-high temperatures led to increased gas demand in countries like Italy, outweighing ample gas inventories, raising fears of potential supply shortages and further price spikes. Despite the surplus, Europe is facing competition with Asia for available LNG, and planned maintenance at major facilities in Norway and Russia will also curb supply in the coming weeks. Meanwhile, meteorologists forecast the weather in the U.S. will remain hotter than normal through at least August 13. The weekend weather data trended a little hotter, as was the risk, while the back end of the 15-day forecast is on the bullish side. This likely aided the morning rally to $2.72. However, prices sold off after and are currently slightly lower on the day. Because of the substantial surpluses, reaching around plus 320 BCF, this could be the underlying cause of prices failing to surpass $2.70. Despite attempts over the past 2 months, prices have repeatedly returned to this level. The big question now is whether the bears will manage to keep prices under $2.70 for the rest of the week, or if the bulls will persist in their battle for control of it. Overall, it is still a tug-of-war between bearish signals, high inventories in Asia and Europe, sluggish Chinese demand recovery, and weak European industrial activity, and bullish signals, heat waves in parts of the US, Asia, and Europe, and unexpected gas production outages or maintenances lasting longer than expected. An average gas output in the U.S. rose to 101.5 billion cubic feet per day so far in July, up from 101 billion in June. That compares with a monthly record of 101.8 billion in May. On a daily basis, however, output was on track to drop about 1.9 billion cubic feet per day to a preliminary one-month low of 99.7 billion on Friday, due mostly to declines in Pennsylvania, Ohio, West Virginia, and Colorado. Analysts forecast U.S. gas demand, including exports, would rise from 105.4 billion cubic feet per day this week to 106.5 billion next week, before easing to 106.2 billion as the weather starts to become seasonally less hot. The current market sentiment for nat gas remains slightly bullish, as the current price of $2.65 managed to stay above the 50-day moving average, suggesting the possibility of a bottoming pattern forming. A sustained move over the $2.65 level will indicate the short-term buying pressure is getting stronger, with a retest of $2.70 as the next likely target. A failure to hold $2.65 will restrain some of the upside momentum, but the uptrend will remain intact unless pivot at the $2.59 fails as support. Thank you for watching. Please like, subscribe and hit the bell. Stay updated with our latest content. Leave your comments below, we love hearing from you. See you in the next video.